Hi, I'm Roger Conrad. I'm editor of Canadian Edge. What I want to call your attention today to is a sector that not a lot of people think of when they think of Canadian income trust and high-yielding corporations, and that's healthcare. Certainly in this country, it's become a major flashpoint in the political arena, overhauling the healthcare system. I think the recent report from the Congressional Budget Office that basically more or less asserted that the bill, the Harry Reid bill, that appears to be the bill that's going to come to the floor, but asserting that it does make good on its promises of adding more users to the rolls and holding down premium costs and also even cutting the federal budget deficit, does give, for one of it, whatever else it may do or whatever else it may mean, it does give Democrats a lot of cover to vote for a package which is obviously in their political interest to do. So, they're getting to the final stages here, but I think this CBO report does make it a lot more likely even that we'll see healthcare legislation and possibly even before the President's State of the Union address in January. Now, however you may feel about that, there is one group of companies that I think has a tremendous upside potential. And these are the Canadian companies and high-yielding corporations and trusts that we cover in Canadian Edge. We have several of them in our portfolios. One is CML Healthcare, which is a major owner of testing centers in Canada, but also has been expanding in a big way in the United States. Pretty easy to see where their upside comes from. As we do get, say, 30 million more people on the insurance rolls, there's going to be more demand for testing. So, therefore, more demand for their services. Really, that's pretty much the play. I mean, these Canadian companies have dealt with government regulation of healthcare for many, many years. They've thrived in that environment, and they're really, I think that experience means a lot going forward as they deal with what happens in the U.S. healthcare system. So that's the topic of the feature article for the December issue of Canadian Edge, which is probably up by the time that you take a look at this video, but I'd encourage you to take a look at that, look at some of the opportunities in that sector. On a general note regarding the trust sector, we've obviously had a very good year adjusted for the rise in the Canadian dollar versus the U.S. dollar this year. The S&P Toronto Stock Exchange Index, or Sportcom, that we use as a benchmark for particularly trusts, in Canada is up northwards of 50% this year. That's a pretty good gain. Of course, a lot of that is retracing the losses that we saw last year, and Canada was dragged down along with everything else last year. But I think it is, by any stretch, a very good year, and particularly for those who did pick up shares in the early part of the year when so many were contemplating abandoning even good positions. But I think there's a lot more upside ahead, and one reason is what I've said before, the 2011 conversion bonus. In other words, as we approach the trust taxation, which takes place in 2011, we're seeing tremendously low expectations for what dividends are going to be after that date. Most of the trusts have pretty much committed to converting to corporations. And the question mark then is what's the dividend going to be at that point? And again, expectations have been placed very, very low. In stark contrast, though, has been the actual behavior of these trusts as they've converted to corporations. Pretty much down the line, when management has been able to maintain the dividend, they've done so after the conversions. And only pretty much when economic circumstances dictate a major cut have they been cutting. One particularly interesting example here just occurred in early December. The example of Baytex Energy Trust, which is a producer primarily of heavy oil. Obviously, that's been a good business to be in this year, and the company announced their conversion to a corporation, which will take place over the next couple of months, simultaneously announcing a 50% dividend increase. So this is the first time that I know of actually a trust increasing its dividend as it converts to a corporation. And I'm not sure how many times we'll see that going forward. I do think we'll see a lot more trusts announcing that they will not cut distributions when they convert. But one thing it does illustrate is that it's all about the business. It's not about the tax. You know, I think investors have labored too long under the false impression that 2011 was a doomsday for trusts, that necessarily they would all liquidate or fall apart, or at the very least slash dividends dramatically. And what we're seeing again and again and again is that the trusts where the businesses back up the distribution are going to be able to pay big distributions, possibly even greater distributions, organized as corporations, even with additional taxes. You know, and again, focus on the business. That's what it really comes down to. I think by doing that, we're going to see quite a few what I call conversion windfalls. Baytex has been treated quite well in the market since making its announcement. That follows the tradition of, or the trading pattern rather, of the other trusts that have converted without cutting their distributions, which now rank over a dozen right now. So, you know, they are actually, investors are seeing a windfall from that. Even the companies that have cut distributions, we're seeing prices go up from there. So I think, again, this is a very nice additional gain I think we're going to see going forward. I also think trusts are going to benefit from gradual improvement in the economy as we go forward. I think the Canadian dollar remains strong against the U.S. dollar, particularly as oil prices, energy prices, other commodity prices remain strong. And it all adds up to perhaps not gains on the magnitude of what we saw last year, or this year rather, but I think some pretty impressive gains nonetheless. And if you're lucky enough to get a merger candidate in there, potential of some real windfall gains going forward as well. So that's all I have to say today. Again, thanks for tuning in. Please check out the issue of Canadian Edge, which will be posted on Friday, December the 4th. And I'll look forward to chatting with you next time.